Wework India has officially set the stage for its public market debut, filing its DRHP with the SEBI. You heard that right. All this while, the parent company in the US has already filed for bankruptcy almost 18 months ago. Hello, my name is Abhinav Trivedi and you're watching Mint Explains. Now, the Indian arm of the US-based company which has filed for bankruptcy there is offering a book-built public issue of an offer for sale component of up to nearly 4.37 crore equity shares with a face value of 10 rupees per share. But unlike many IPOs that inject fresh capital into business, Wework is offering a pure offer for sale. Now, this means that existing shareholders, including promoters Embassy Buildcon and one aerial way tenant, will be offloading their stakes without any new capital flowing into the company itself. Now, Embassy will offload their 33.4 million shares, while one aerial way tenant will offload 10.2 million shares. Now, the reports suggest that Wework India's public offering will allow its promoters to monetize their stakes at a strategic juncture in the industry's growth cycle. Now, let's talk about the company's numbers. The path to profitability. For the first half of financial year 24-25, the company reported, the Indian arm, reported a net profit of rupees 174.13 crores, a stark contrast to the net loss of 135.83 crores in the last financial year, 23-24. This marks a significant turnaround from almost 643 crore losses in financial year 21-22. Total income for 6 months ended September 2024 stood at rupees 960.76 crores. Now, Wework India's revenue for FY 23-24 soared by 27% to 1665.14 crores. Firm has also been working aggressively to cut its debt, raising rupees 500 crores through a right issue earlier this year. Karan Virwani, MD and CEO of Wework India, in an official company statement said that over the past 8 years, we have focused on long-term sustainable growth. With the recent successful completion of our rights issue, we are on the path to being debt-free. This underscores the trust and confidence our shareholders have in our vision. Now, while its revenues and profitability have shown marked improvement, the company still faces operational costs, competitive pricing pressures, and potential lease obligations that could impact its bottom line. Investors will keenly watch how the company sustains profitability in the long run. Now, let's come to the parent. The IPO filing comes at a time when Wework Global has been grappling with bankruptcy following a period of over-expansion and financial mismanagement. The entire saga has also been converted into an Apple TV series starring Anne Hathaway and Jared Leto. Wework India has consistently maintained that it operates as an independent entity shielded from the turbulence affecting its global counterpart. Now, the Indian franchise, backed by Embassy Group, has emphasized that its business model, market demand and operational efficiency distinguish it from Wework Global. Now, the earlier plan of the global company to exit its Indian joint venture by selling its 27% stake was stalled due to valuation mismatch. Now, this gets interesting. With the public listing now in the works, it remains to be seen how the ownership structure evolves post-IPO, and most of the investors will be keeping a very close watch on this ownership development post the IPO. Analysts speculate that post the IPO, Embassy Group may look to consolidate its stake further, ensuring long-term stability. Now, India's co-working and flexible office space sector is witnessing a dramatic shift, with enterprises embracing hybrid work models and startups seeking cost-effective office solutions. The demand for flexible workspace is soaring. According to real estate consultancy CBRE, the country's flexible workspace market, currently at 55 million square feet, is expected to expand between 100 to 140 million square feet by 2030. Wework India leads the market in terms of revenue, with a portfolio spanning 94,440 desks across 59 centers in major cities, including Bengaluru, Mumbai, Delhi NCR, Pune, Hyderabad, and Chennai. Moreover, the company is expanding its footprint. Recently, it leased over 175,000 square feet of office space in Bengaluru and Pune to cater to growing demand. The Indian flexible workspace market has grown increasingly competitive these days, with office space solutions, SmartWorks, IndiCube offering alternate solutions. Office, which went public in May 2024, saw its stock oversubscribed by 108 times. Wework India's IPO will serve as a litmus test to gauge whether the enthusiasm for co-working IPOs sustains or fades away. Now, since the IPO is purely an offer for sale, the proceeds won't be utilized for expansion or strengthening the company's financial standing, raising concerns for growth-focused investors. Additionally, with the growing number of competitors offering differentiated pricing models and customized office solutions, Wework India will need to ensure that it maintains its premium positioning while managing costs effectively in a value-sensitive market like India. If the broader stock market remains favorable and the company's appetite for commercial real estate investment continues to grow, Wework India may see a strong demand. Conversely, any macroeconomic downturns or rising interest rates could pose a serious challenge.